Hey, do you want to earn money in stock market? You want to become a stock trader? This video is for you. Watch this video completely to know what stock market is, how to improve yourself, and so on. Hi everyone, welcome back to our channel. Today's video is about sharing my knowledge in stock market to you all. This video is not only for beginners but also for people who are already in stock market who are trying to mold themselves. This video helps you to understand how stock market works and whether to be a stock trader full-time or part-time, whether to have stock market as your career, and so on. This is actually our first video on introduction to stock market. Please try to hold on with us and make use of it. In this video, you will get a clear view on types of stock traders, types of segment we have in our Indian stock market, and capital requirement. Okay, let us jump into the topic. If I go to my friend and if I ask what stock market is, he will say that it is a place like gambling and we can earn lakhs and lakhs in few minutes or hours. Many people have misunderstood what stock market is. People with less knowledge about stock market will assume stock market as gambling, but it is not. A right trader or an investor who believes in analysis of both technical and fundamental and price action, who can understand the market structure, and he knows the psychology in trading. People with these qualities won't say that stock market is a gambling. We just need few qualities to be in stock market: knowledge, patience, and analysis. With these three qualities, we can make our ways in success in stock market. We must be knowledgeable on how stock market works, in what company we are going to put our money, which sector is going to boom in few years, and so on. And the next one is patience. We must be patient. If we invest in a company and we hold it for years, we must be patient. Nothing comes so soon, right? It takes time to make good money. Being patient will always make our way to success. That is why even Dhoni is called as Captain Cool. Now, analysis. With the help of fundamental and technical analysis, we can find good entry and exit in stock market. Analysis plays a huge role here. If we have these three qualities, we can confidently stay in the stock market for longer period of time. There are only two types. The one is an investor and the other is a trader. An investor is a person who puts his money in stock market and holds his position for long period of time. We would have came across that our parents, our relatives or our friends says that they have invested in stocks, which means they have put their money in a specific stock and they wait for long-term perspective. Now the other person is a trader. A trader is who buys and sells the share in short-term perspective. Like it may be minutes, it may be hours, or even a week. Okay, now I assume that you have got an idea what these two things are. Let's dive deep into it. As I mentioned that an investor holds his position for long term, but the required time for him is very less. But he doesn't need to stay active for whole trading hours. Okay, let me put us in a scenario. I am willing to buy 100 shares of State Bank. State Bank is trading around 500 rupees today. If I want to buy 100 shares, then the total amount I required is 50,000. Now I bought 100 shares of State Bank at the value of 50,000. After a month, if State Bank is trading around 550 rupees, then I have earned 10%, which is 5,000. This will be my gain. But this is not the only gain I get in return from investment. We also get dividend and bonus. Dividends and bonus are issued by a company we invested in. It is a type of gain where a company shares their profit with us. Example, if State Bank makes 1000 crore profit a year, they share some of the profit with us. It helps us to increase our portfolio value. And the another thing is, we can consider this as a savings too. If we had saved the money for long years and if we haven't used it, it may lose its value, right, by inflation and all such things. So we choose FD or mutual fund as an investment. But if we assume that the stock is going to make a good return more than FD, we can confidently believe in investing in stocks. This is a good way to do. Okay, let's move to the other side. A trader. A trader is who buys and sells shares within minutes, hours, days, weeks, or even till month. His holding portion will be limited and in short term. Let me put this in SBI scenario itself. I am willing to buy 100 shares of SBI at the price of 500. I am buying SBI per share at the price of 500. If it goes up by 10 points, which is 2%, I will be making 1000 rupees for that 100 shares. But the invested amount won't be 50,000 like how we did in investing. Here, for doing intraday trading, we'll be getting leverage from our broker. So, the capital required here is really less by compared with investing. It shows that reward is high for doing intraday trading because we use lesser capital. But the thing is, it takes equal risk to do this trade. The risk reward ratio is same here. The expected reward for the trade is equal with the risk we are about to take for the trade. And the another most important thing for a trader is he must be updated on everything like news, economic situations, all these things. Because news plays a major role here. For example, on 1st July 2022, which was on Friday, our Indian Finance Ministry has imposed tax for petroleum products. They have increased it to diesel 13 rupees per liter and for petrol 6 rupees per liter. So this has hit all petroleum stocks. On this day, Reliance has fallen more than 8.5% and stocks like ONGC fell more than 13%. So for intraday trader or a swing trader, this was a big hit. We have to be economically updated. This may help us to reduce risk from the trade. Let me put in this case. If I have bought Reliance this week and I expect 10% return from it in a short period of time, but I was not updated on the taxation news. So after the fall of 8%, I'll be facing loss on this trade. If I had known this news, I would have not entered in this trade or I would have sold it before itself. So this is how we change the perspective of the trade if we are updated on the news. Okay, now we will see what all type of segments we have in Indian stock market. There are 5 segments: cash market, futures, options, index and commodity. We can trade in all these segments, but we have to find which segment is suitable for us. We will discuss about cash market, futures and options on this video. I will put a separate video for index and commodity. Now we will get into cash market. Cash market is a place where we trade in equities. The capital required for dealing in cash market is a bit high, but the risk here is really low. The scenario which I had for State Bank will suit here. As it required large capital to trade, the reward is really low as well as the risk. Because if I buy State Bank at 500 rupees and if it moves 10 points, I'll be gaining only the 10 points. But the deployed capital is larger here. As we discussed, if I deal with intraday trade, the capital required here will be less. So, cash market is a place where we can trade equities alone. But the another main important thing in cash market is we can hold a position for even years. We can buy State Bank and we can hold it for more than 20 years, 30 years. It doesn't have any time limit for it. Now we will move to futures. Futures is a place where we trade in lots. It requires higher capital and it involves higher risk and reward. And it is time based. The contract for this futures ends on every month end. I will explain it a bit deeply. As I said before, in futures we can trade only in lots. The minimum quantity we should buy is one lot. In State Bank, that one lot has 1500 quantities. It depends on each company, but State Bank's lot size is 1500. So if I am willing to buy one lot of SBI future contract, I just need 2,50,000. But if I want to buy this as equity, which is in cash segment, I need 7,50,000. But in futures, we just required little amount. It doesn't matter whether it is an intraday trade or we are going to hold that position till the month end. The capital required here is very less. The reason I am saying that this contract requires less capital is just by comparing with cash segment. But here too we deal with huge amount. As the quantities per lot is higher, the risk and reward is also the same. Each future contract ends at the month end. For example, we'll be having 3 months contract ahead. July futures, August futures and September futures. If I buy August futures, then I must close the position before August month's end. Every Thursday of the month end is an expiry. And the important thing is, not all the stock has futures and options contract. In our Indian stock market, only 200 companies are named in futures and options. Now we will move to options. Options is different from cash segment and futures. There is two major things in options. One is call option and the other one is put option. And the capital required for buying is very less. For options also, the expiry is month end. Let me put in a scenario. If I am willing to buy State Bank futures, then the amount required here is 2.5 lakhs as I said. If I expect State Bank to rise from 470 to 500, I will be getting 30 rupees profit per share, right? So I will be making 45,000 from invested 2,50,000. Instead, we will be choosing a strike price. Example, if I predict that State Bank will move to 500 from 470, I will buy that State Bank 500's premium, which is trading around 4 rupees. If the share price moves from 470 to 500, this premium may rise to 8, 9 or even 10. So the capital required here for buying is 6,000. If the premium of 4 rupees reaches 8 rupees, my profit will be 100%, which is 6,000. But if my prediction is failed, if it failed to achieve the target of 500 and it goes opposite side, I will be losing only the invested 6,000. So the risk here is really low. Each strike trades with different premium. Now put option. If I predict that State Bank will go from 470 to 450, I will be buying put option. The 450 strike price, 450 put is trading at 6 rupees premium. If I want to buy that contract, I just only need 9,300 rupees. So if State Bank falls to 450, the premium at 450 strike, which is 6 rupees now, will be trading at 10, 12 or even more. So I'll be making a good profit and my loss will be limited to this 9,300. As I said before, buying option contract requires less capital, but selling them requires more capital. This 450 strikes buy price is 9,300, but if I want to sell that contract, the margin required here for me is 2,10,000. So let us keep selling for now. I will come up with a video for you all in upcoming days where I will be talking about each topic specifically in a video. Now we will move to our next topic. Capital requirement. In this topic, we will be helping you to understand how much capital is required for trading in each segment. let us assume that if we have a company named XYZ and it is valued at 1000 rupees and the lot size of future and option contract is 600. With having this in mind, we will do the calculations. In cash segment, if I want to buy 600 shares worth 1000 rupees, then the capital required for me is 6 lakhs. But for futures, it is really less. If we have to buy it for 6 lakhs in cash segment, we will be required only 1.25 lakhs for trading in futures. This is just an approx price. Now we will see for options. If we predict that the stock price will move from 1000 to 1020, which is the next strike price, the premium is trading around 30. So we will be paying 80,000 rupees for per lot. If the stock price increases to 1000 to 1020, then the premium of 30 rupees will increase to 40, 50 or even more. The same applies for put contract. If I predict that this share is going to down for 20 rupees, I will be buying 980 put options premium 30 rupees, which is 18,000. So if the stock price comes down to 980, the premium of this 30 will increase. So I will be making profit as how much ever the premium increases. Now we are at the last topic of this video. This is about capital required for trading in each segments. First one is equity. For equity, if we have 1 lakh capital, it's good to trade. Because if we capture 2%, then our profit will be 2000. 1 lakh will be a good capital to start with. For futures, we must need at least 5 lakhs. Because it requires around 2 to 3 lakhs to buy one lot. So having 5 lakhs capital for futures will help us to trade well. Option buying. For option buying, we require capital around 50 to 75,000. The premium depends on each company. So 50 to 75,000 is good to start with. And the last one is option selling. For option selling, we need a huge capital. After explaining you about what option selling is in a separate video, I will let you know about capital required for option selling. Hope you people enjoyed this video. We will come up with more videos for you in upcoming days. So please do subscribe and hit the bell icon. If you have any doubt, please don't hesitate to ask. You can ask questions in comment section. We will try to solve it easily and we will explain it to you. And also, if you want any other video with a specific topic, please share with us. We will try to make it in our further video.